Good afternoon, ladies and gentlemen. On behalf of the Wycliffe Foundation and the Jesus Film Project, welcome and thanks for joining our 7th in a series of webinars on gift and estate design. My name is Mark Mayers and I'm serving as a regional representative in the Fund Development Office of the Jesus Film here in Southern California. I'm going to be your moderator for the next hour. Perhaps some of you watching today have taken part in some of our previous webinars. Welcome back. Thanks for joining us. Today's session is entitled Tax Planning, Deductions, Peace of Mind, Knowing Your Bases Are Covered. By the way, if you missed any of our previous webinars, the recordings of that content are available on both ministries' websites. Topics covered in past webinars have been estate planning to accomplish your goals and dreams and other tax advantage design and gifting strategies. The presentation today comes to you through the joint partnership of the Wycliffe Foundation and the Jesus Film Project, a ministry of Campus Crusade for Christ International. Wycliffe and the Jesus Film have partnered together for many years in the area of language translation, but now we've teamed up in serving our friends and financial partners of both of our organizations in the area of gift and estate design. Athletes in Action, Family Life, International School Project, and other Wycliffe ministries such as the Seed Company, JARS, and the Graduate Institute of Linguistics are also joining us in our webinar this afternoon. Thank you for joining us. Through the power of global web technology, our presenters are going to share with you essential concepts that can help you preserve your estate, provide more for those you love, and advance the ministries and organizations you care about today and tomorrow. A number of past webinar participants have already taken advantage of this opportunity. Effective biblical stewardship has been practiced and lives have been changed as a direct result. One recent past webinar couple have created a tax-wise plan that will generously benefit both Wycliffe and the Jesus Film at their homegoing, having put their home and other assets into a trust. During our webinar, you'll no doubt have questions for our experts. I know I have them all the time. We will answer questions at the end of the presentation, which should be about 25 to 30 minutes. During our session, you may submit your questions at that text box at the lower right-hand corner of your screen. If after our time together today, you would like to share this presentation with others, or for some reason you need to leave early, a recording of this content will be available at the same web address on the 5th of October. That's the 5th of October. A recording of this webinar will be available to you. Our presenters are with me here in Southern California today, so let me introduce our gift and estate design experts. Michael Acapente has become a dear friend and is from Monument, Colorado. Michael's worked in the gift estate design area for over 28 years with organizations that include Campus Crusade for Christ International and the Salvation Army. He's currently a gift planning advisor with the Wycliffe Foundation, one of the ministries under Wycliffe Bible translators. Michael studied business and economics at UCLA and holds a master's degree in taxation from USC, so he's just a little schizophrenic when it comes to sporting events and who to cheer for. Michael, welcome to the webinar. Jay Link is from the suburbs of Grand Rapids, Michigan, and is also joining us here in Southern California. Jay has served in financial and corporate charitable foundation leadership with a Fortune 1000 company for over 30 years. Since joining our team as a gift and estate designing consultant, Jay has used his expertise in accounting and charitable giving to help ministry partners become more effective stewards of the resources God has entrusted to them. Along with Jay's undergraduate degree, he has an MBA and has earned professional designations as a certified public accountant, certified management accountant, and a certified gift planning associate. Jay, welcome to the webinar. Both Jay and Michael have served countless ministry partners for many years, helping them leverage their current as well as deferred giving after their homegoing. So if your goal is to be the most effective and tax-wise steward you can be, you're in the right place. Without further introduction, let me turn this presentation over to Michael. Michael?
Hey, thanks, Mark. And thanks all of you who have joined us today to spend some time with us as we talk about tax planning, deductions, peace of mind, how you can benefit. Part of my role and that of Jay's is to help people use the God-given assets to be good stewards and advance His kingdom. And what we hope to share with you in the next few minutes are some strategies and ideas that you can employ this year and the future to help you do that. We'll be talking about some case studies such as how you can make direct gifts of appreciated assets, something called the zero tax gift and sale, donor advised funds, the direct charitable IRA rollover, and for those folks who own oil, gas, and mineral rights, how you can plan for that. And then finally, we want to share with you the charitable gift and estate design services that both the Great Commission Foundation and Wycliffe offer to people at no cost and no charge. But first of all, to set the tone for our time together, let's talk about one of our favorite subjects, taxes. Jay?
Thank you, Michael. Well, as you can see from this slide, that there's a number of taxes that you need to overcome that are a major hurdle that we in our work can help you be successful at. And so let's look at what those different types of tax structures are that you're faced with. The first one's income taxes, and the federal income tax rates can range anywhere from 0 to 39.6%. State income taxes can range, obviously depending upon what state you live in, from 0 to 13.3%. Then you've got capital gains tax. You've got a federal capital gains tax, which can run from 15 to 20%. We also have state capital gains taxes, again, which run from 0 to 13.3%. The national average is about 5, but there are many states that are way over that. And then the last tax is the Affordable Care Act tax, which is 3.8%. So you can see there's a number of different hurdles that you're faced with when you're dealing with taxes. A lot of folks don't realize that the capital gains taxes are really optional. So when we say optional, what do we mean? Well, you can pay them, you can postpone them or defer them, or you can bypass them entirely. You can do that when you die, obviously, but there is a better way of waiting until you die, and that is through effective charitable giving. You can actually transfer those tax dollars to kingdom dollars. Let's look at our first strategy and tool. This is the direct gift of appreciated assets. What exactly are appreciated assets? Well, they are those that have increased in value since the point in time you acquired them. So some examples, and many of these are obvious to you: stocks, bonds, and mutual funds. Real property, and that could be commercial, could be residential, could be farm property, it could be vacant land. Business interests, you could have partnership interests, you could have an LLC, you could have a C Corp, or you could have S Corp interest. And lastly, in our examples here, are artwork and collectibles. And collectibles could include antiques, could include coin collections, or stamp collections. What are the benefits of gifting appreciated assets? Well, there's a whole bunch, but we're going to just focus in on 3. If you look at the slide, the first one is that when you gift appreciated assets, you experience multiple levels of tax savings, which we just looked at that previous slide. Number 2, you can give substantially more because you're giving from your assets and not just your cash flow. Now, this is an interesting statistic. Most people, when they do their giving, they only do it out of 10% of all the resources that they own. That's typically their cash or their liquid assets. But the 90% of the resources are held in non-liquid assets that people oftentimes don't know quite what to do with them from a charitable giving perspective. We help people explore that 90% and really leverage the capacity to give. And then lastly, we can help people to transfer tax dollars to charities of their choice as opposed to a charity not of their choice, which is the government. And we think that's huge. I'm sure you do as well. Michael, why don't you go through a case study that helps people understand that giving appreciated assets a bit better?
Thanks, Jay. As Jay said, and we're going to show you in this case study, an outright gift of an appreciated asset can really result in 5 levels of tax savings. And when compared to a cash gift, that can be quite significant. So I want to share a story with you of a couple that I went on an appointment with a colleague of mine, similar to what Mark does, to talk about a gift to a Wycliffe project. We talked about the project being $10,000, and we also had the conversation about what's the best way to fund that gift. Now, Nick and Rachel, they could easily have written a check for $10,000. They're in a very good position to do so. And if they wrote that check for $10,000, they would have gotten a $10,000 deduction, and at their tax bracket would save about $4,000 in taxes, federal and state. And that's not bad. But we thought, let us show you a better way to fund this project. If they instead made a gift of an appreciated asset, let's look at the tax results that could be accomplished by doing that, instead of writing a check out of their checkbook. And that's what we talked about. We said to Nick and Rachel, you have some stock. What if you gave $10,000 worth of stock to this project instead? And as we'll see in the next slide, you'll see how the numbers worked out. So, again, they made a gift of $10,000 worth of stock, which is publicly traded, and that's what it was worth at the time of the gift. You can see the 5 levels of tax savings here. You have the $3,500 they saved in the federal level. At their state tax bracket, $500. By the way, there's capital gain taxes for a federal tax of 20, and many states have a state capital gain tax. In this case, it was 5, and of course, there's that affordable care tax. If you add up all those tax savings, you can see that adds up to $5,700 versus making a gift out of their checkbook or out of cash of $4,000. And that's a pretty good increase, a 43% increase, almost $1,700 more in their pocket just because they made the charitable gift out of their assets versus their checkbook. So, something to consider as you look at funding gifts to ministries and year-end planning. Now, sometimes I'll sit down with the folks, and I know Jay does as well, where they say, I like the idea of giving an asset, but I don't want to give it all away. Is there a way that I want to keep some for myself? We have other needs. It may be retirement needs, income, whatever the case may be. It doesn't have to be all or nothing. And the good news is, no, it doesn't. In those kind of cases, we'll sometimes talk to folks about what we call the zero gift and sale. And essentially what that is if you can give enough away to create enough tax savings to offset the part that you keep and sell, and may have some capital gain tax liabilities on that. So let's look at a case study of a couple who had an income property actually in Orlando near the gates of the Wycliffe headquarters, and just happens to be of Crusade as well. Kirk and Cindy owned an income property. They purchased many years ago, and it's appreciated significantly. In fact, it's now worth about $500,000 according to their realtor. Their tax basis, which is pretty much what they pay for the property, add in the improvements, take out the depreciation, is about $100,000. And frankly, they're tired of being landlords. What they would love to do is get rid of this asset, this property that consumes quite a bit of their time, and go in their RV and visit the grandkids. But there's a big obstacle, and that obstacle is if they sold it outright, they'd be paying over $100,000 in capital gain taxes. Just a check they can't really get themselves even thinking about writing. And so they understand, listen, we know we can't keep it all, but is there a way we can sell this and at least, instead of writing a check to the government, fund our favorite charitable endeavors? Yes, there is. Let's look at a zero tax gift and sale. Now, the basis, what we first do is, as this next slide you'll see in a moment, let's look at what they would do without that sale. You can just see the numbers there, but the one I want to point out is the big red one, kind of in the middle. If they sold this asset outright, they would lose over $100,000 of capital. That's going to go into the federal budget to be used for who knows what. So, and they just don't really want to do that. So what we said is, let's run the numbers for you and see how much you can keep and how much you'd have to give away to create the zero tax gift and sale strategy. And so that's what we did. And in their case, we determined if they gifted approximately kept about 60% or about $311,000 in value and gifted $189,000 or 40%, a couple of things happened there. First, you can see in the, let's go backwards. In the green box, making a gift to charity of $189,000 at their tax bracket would save them about $62,000 or create $62,000 in income tax savings. On the blue box, you can see the portion that they kept. And by the way, we had a joint sale of this property, listing and selling of it. It created a capital gain tax liability at their bracket of about $62,000. And how this strategy works is you use the tax savings from the charitable side to offset the capital gain tax liability on the sales side. Now, an important caveat as I describe this strategy, it's really important to have your CPA or tax professional involved because we're looking at something in isolation, but you really need to look at it in the context of your overall tax return. And so that's where the CPA needs to plug in these numbers to say, yes, we can do this all in the year of the gift, or maybe we can get the offset, but it may be over a series of 1 to 5 years where the offset occurs and you have a zero tax effect. So just a caveat. Last, you might notice on that chart that there's a little thing called 2DAF for charities. A DAF is a donor advised fund. We love this, and Jay's going to talk about this in a moment. But a donor advised fund allows people to give to multiple ministries. We don't pretend to think that Wycliffe or the Jesus Film Campus Crusade are the only charities people give to. We understand people have multiple charitable interests, and that's fine. My job and Jay's job is to show you the best way to give and let the Holy Spirit direct you to what to give. And so we love to employ the idea of a donor advised fund that gives a person an opportunity to make this charitable gift and this strategy to multiple charities which they're passionate about. So again, a couple of strategies, an outright gift or a partial gift can allow people to accomplish great things for the ministry and for the kingdom of God and take care of their goals. I mentioned that thing called a donor advised fund. I'm going to pass it back over to Jay, who will explain more about what a donor advised fund does.
Thank
Jay?
you, Michael. Well, donor advised fund, what exactly is it? Well, you can see from the slide, the definition says it's a charitable giving fund that is separately administered by a public, nonprofit charity into which donors make irrevocable, tax-deductible contributions, and from which then they can make grants to various charities of their choice. Now, this isn't a new tool. It's been around since the 1930s, and it has many benefits similar to a private foundation, but the big takeaway is you don't have to worry about the financial, legal, or administrative red tape that's associated with a family foundation. This has become a particularly popular strategy in the last number of years. I mean, if you look at the years from 2007 to 2012, in that 5-year time frame, the number of DAFs in place in the U.S. has grown 26%. The amount of investment in donor advised funds has gone up 42%. And the amount that's been given out of donor advised funds has gone up 39%. So it's become very popular because it's so easy to use. Look at this next flow chart. This shows you very, in nice graphic terms, how you would set one up. So here we have John and Carol, and they opened up a donor advised fund in a local public charity, and they gave it the name, their John and Carol Donor Advised Fund. And once they set that up, then they could put into that donor advised fund either cash or appreciated assets. Now, when they did that, in the calendar year that they did that, they were able to secure an income tax deduction. And once the money was in the fund, then they could take their time to recommend grants to charities of their choice, to the public charity that was holding that DAF, and they could accomplish all of their wishes that they were hoping to accomplish. So that's how a donor advised fund works from a graphic perspective, but how does it benefit you? Well, there's a ton of ways that it benefits you, but we'll just look at 3 in particular. You can do tax-wise giving, and we mentioned that before. You can receive a tax deduction in the year that you make the contribution to the donor advised fund, and then you can take your time to figure out where you want that money to go. And that's a nice benefit. If you're particularly concerned about giving in an anonymous way, and some folks that's very important to, I mean, they believe the scripture when it says that the right hand should not know what the left hand is doing as it relates to giving. And so therefore, they might have a strong conviction about their giving not being known by the person that they give it to. Well, if that's your conviction, then a donor advised fund can support that very easily. And lastly, family giving is a great way to utilize a donor advised fund to teach your children and your grandchildren your values, your stewardship philosophy in a fun and winsome way. Let's look at a case study that kind of talks about that a little bit. And here we have Joe and Dawn Green. They had worked in real estate and acquired several rental properties over the years. And they would like to donate one of those properties to support ministries that evangelize the lost. They'd also like to engage their children in their charitable endeavors. And the tax concern they have is they want to be able to avoid a 30% capital gains tax, which is made up of 20% federal and 10% state. They're in a state that has a high tax rate. So what can they do? Well, let's look at the plan that they encompassed. They set up the Green Family Fund using a donor advised fund, and they donated one of their properties to the fund. When they did this, that gave them an income tax deduction, and they were able to bypass federal and state capital gains taxes. They, along with their children, did some research on their favorite ministries that reached the lost. And then once the property that was transferred into the fund was sold, they had some cash to work with. So they called a family board meeting, and they reviewed the ministries that they researched. They voted on the ones that were most effective, and they recommended grants out of that donor advised fund. So you can see it was a great strategy for them. Is a donor advised fund something that may be applicable to you? Well, if you desire the benefits of a private foundation without all the red tape, it will certainly work well for you. If you need time to decide which ministries to support, but want a tax deduction right now. What if you want the flexibility to make both cash gifts and non-cash gifts? It will help support that objective. If you want the freedom to be able to change beneficiaries, you have that opportunity. And you can also, again, as we mentioned before, give anonymously and also use it to support passing on your giving values to the next generation. Let's look at our fourth strategy. This is the IRA Charitable Rollover. Now, I need to say right off the bat that this has not been approved for 2015. We're hoping that it is. This needs to be reviewed by both the House and the Senate and then voted on by them and then signed off by President Obama. So there is quite a bit of process that needs to happen. And the Congress has just resumed meeting this week, and we're hopeful that this will be something that will be on their docket to review. So for right now, it's not, but it's been in place for the last 9 years, so we're relatively hopeful that something will happen this year. But how does it work? Well, an IRA charitable rollover is a contribution that you make with your custodian right from the IRA that you have directly to the charity that you choose. It doesn't go to you personally, it goes right from the custodian to the charity. And it's subject to the following stipulations. Now, these are the ones that have been in place in the past, and we believe that these will probably be also in place if it's approved for 2015. It only relates to traditional IRAs, not Roth IRAs, and the person that uses this must be at least 70.5 years of age. They'll have the ability to transfer up to $100,000 directly from their IRA to a charity or charities of their choice. And another thing to keep in mind is if you have a 401k or a 403b, they do not qualify for a transfer. But if you roll those funds over into an IRA, then you can take them out of the IRA into the charity of your choice. What are some of the features and benefits of this strategy? Well, an important one is it satisfies the minimum distribution rules that the IRS imposes on those that have an IRA and who are over 70.5 years of age. And if you're in that category, you know how abusive that can be or how awful that can feel. And this is a benefit that's nothing but tax positive. It doesn't go into your income, and therefore you don't have to worry about making a deduction against it. But by not grossing up your income, it avoids putting you into a situation where you're subject to the limitations that are imposed on charitable deductions and other deductions. And it also keeps you from being catapulted into another higher tax bracket. And because we have a progressive higher tax bracket, the higher your income, the more the tax rate is. And so you certainly want to avoid that if you can. But another huge benefit of this, it's just easy to do. You just work with your custodian. They can make the transfer happen in a seamless way right from your IRA into the charity or charities of your choice. So is an IRA something that may be of benefit or of interest to you? Well, it could be if you have a traditional IRA. If you're required to take the required minimum distribution, but you don't need that income. If you give more than 50% of your adjusted gross income already, this is a way of being able to do some giving without having to worry about not getting an additional tax benefit for it. If you have a large IRA balance and you want to get money out of that IRA into a charity or charities of your choice, then this is a great strategy to do that while you're alive. Suppose you have a large IRA and you anticipate there'll probably be some balance in there that you might be passing on to a charity when the Lord calls you home. Well, you can choose to advance that to the charity early while you're alive, and then you can see the benefit of what your dollars are doing for that mission organization. And lastly, if you don't itemize and therefore don't receive any tax benefits for your charitable contributions, don't worry, this strategy will accomplish your objectives just as well. Michael, I'm going to turn it over to you because this next strategy is of gifts, oil, and mineral rights, and I think you have some expertise in this area.
A little bit. Thanks, Jay. Just one comment on what Jay talked about IRAs. I really think it's the best way to give cash if the law passes. It's just a great strategy, so stay tuned. As Jay said, the last asset category we're going to talk about at this webinar is gifts of oil, gas, and mineral interest. This past year, I've come across several donors who have these types of assets, and frankly, one of the biggest challenges in owning land that's rich in oil and gas or mineral rights are the income taxes that come with the production of income that they produce. Now, I know the price of gas and oil is down a wee bit, but it's still a particular issue for a lot of folks. So when we're talking about folks who have oil and gas and mineral rights, there are typically 4 strategies we look at to help them manage, from a tax perspective, this issue of oil and gas and the extraordinary income that it can produce. I'm not going to go through all the strategies. We're going to focus on one in particular in the next case study, but here's the list. Making a gift of an undivided interest in land, making a gift or an assignment of the royalties, using something called a charitable remainder trust to kind of build up a bank of assets for income in the future, and something called a life estate, which involves, in a sense, bequeathing part of the land. But to give you an idea of how this works, share a case study with you of a couple that I visited with in North Dakota. Really a fascinating story. This couple was actually a missionary to Peru many years ago. They came back to run the family farm. Well, their great-great-granddaddy had homesteaded over 1,600 acres in North Dakota in the Bakken Oil Valley, and 60 oil wells later, several pipelines, and a lot of other stuff. They've got more money and income coming in than they ever dreamed of. And they're very generous. They've been led by the Holy Spirit to generously bless and support ministries that are close to their heart. But frankly, they're giving well over what's allowed by the law, which is 50% in any one year of their adjusted gross income. And so they're still paying more in income taxes that they'd like. And so we chatted about what can we do, what can they do to be more tax-wise in managing this extraordinary wealth that the Lord has, blessed them with. Thank you, Grandpa Jones. Well, we came up on a strategy called an irrevocable assignment of royalty income. And you see that initial DEF, and we decided we're going to put it into a donor-advised fund because these folks have multiple charitable interests. But essentially what the strategy does, it allows them for those royalty rights that they've irrevocably assigned, it shifts that income from essentially their tax return to the charity managing the donor-advised fund. What does that accomplish? Well, as we said, now they're not reporting as much income, which means their tax bill is lower. And they don't get a charitable income tax deduction for it, but that's okay, because frankly, shifting income off your tax return is better than a deduction, because the deduction is subject to the 50% rule, which essentially means in any one year, we can give over 50% of our income to charity. We just can't deduct anything over 50%. We have to carry it forward for 5 years. So with this strategy, it was just a great tool to help these persons who had oil and gas income still be charitable, but to do it in a much more tax-efficient way. The last part of our webinar, we want to talk about something that a lot of the strategies that Jay and I have discussed up to now include how to make current gifts of assets. As Jay mentioned, 90% of the wealth of our country is held in non-cash assets. They're not in our checkbooks. We want to shift gears a little bit, though, now and share with you what's called our Charitable Estate and Design Service, a service that both Jay and the Great Commission Foundation and myself and the Wycliffe Foundation offer when talking about overall estate planning. So, Jay, why don't you explain that to our guest?
Thank you, Michael. This is the service that we offer to our ministry partners that I enjoy the most engaging around because it's the way people can leverage their assets for giving in the most significant way. When we help people do an estate design, we actually construct for them a design blueprint that they can take to their attorney, and with that blueprint, their attorney can actually build for them an estate plan. I mean, let me share with you a kind of a bit of a personal metaphor. My wife and I built our dream home about 10 years ago, and we had all kinds of ideas as to what we wanted to put into that home. So when we found the contractor, we realized that we just couldn't sit down with him and give him ideas. He needed to have a blueprint that identified specifically what we wanted and how it was to be done so that he could build our house from that. Well, an estate plan's the same way. You're constructing a plan, but we actually make a ministry partner what we call attorney ready, and we give them a blueprint that they can share with their attorney. They can have an intelligent conversation using some pretty significant terms, and they can be in control of the conversation and get what they want with their attorney. Now, this whole process is really our way of saying thanks to our partners for their partnership with our ministry. And the information that you would share with us when you engage in this is kept confidential, and you never have to worry about there being a cost or an obligation to give back to the ministry. Now, as Michael mentioned earlier, we realize that people have multiple charitable interests. And of course, when we do an estate design for people, we learn of what those interests are. But you know what? It's not important to us who you're giving to or how much. That's between you and the Holy Spirit. You know, we think God can direct you a lot better in that process than we can. So when we do an estate design for people, we actually will cover 5 biblical principles, and I'll just go over these really briefly with you here. But the first principle, and this is kind of obvious to most folks, and that is that really God's the owner of all that we have. And that's based upon Psalm 24. And although we might have title to assets because our culture or society requires that, from a biblical perspective or spiritual perspective, we don't really own any of it. God entrusts that to us so that we can use that for his good purposes and glory, and expects us to be found faithful in how we act as stewards of that which he's entrusted to us. The third principle that we talk about with folks is that the priority of how they transfer things in their estate plan is based upon dependency. So your children perhaps have some level of dependency upon you, and some children may have greater levels than others. And there are certain ministries that you have passion for that have dependency upon you as a donor, and they'll enter into that equation as well. Now, in addition to dependency, the motivation for all that we do in our estate plan should be motivated by love, whether it's to individuals or charities. You wouldn't want to give to someone that you don't love. And lastly, and this is really important, and this is really the thing that sets us apart from a lot of other professionals in this field, and that is that we believe that people are always more important than dollars. And what does that mean? Well, we think in your estate plan, you should set that up so that in the different people that you involve in that plan and the different decisions that you make, you are never putting your children or other loved ones at odds with each other, both while you're alive and after you pass. And so we spend quite a bit of time talking through those issues with people in a sensitive and empathic way. Our estate service is very comprehensive. So when we do that with you, we will provide these benefits to you. We'll enhance your appreciation of biblical stewardship. We'll help clarify the significance of titling assets and different types of assets different ways. We'll distinguish between gifts that you might want to make during life and gifts that you might want to make in your estate. We'll talk about the merits of having a will and different types of trusts. And then going back to that whole notion of not creating any conflict with loved ones, we'll help you to think through how you might choose who would serve as your personal representative, or who would serve as a trustee of a trust that you create, and who might be candidates to serve and have the power of attorney for healthcare and business affairs. And so we will spend some time really walking you through all those options so that you understand the benefits of that. So this is our key service. It's one that we love to provide because it really helps you to leverage your financial resources in the greatest way to have the greatest impact for the kingdom. Michael, I'll turn it back to you.
Thank you, Jay. Well, as we summarize, whether you're talking about current giving strategies of assets, which we shared, or as Jay talked about, the estate planning services, we're here to serve you. This is really a ministry, a service that we offer to the people who support our ministries. Why should you include us in your team? Well, I think we have some reasons. There's no pressure, there's no cost, no hidden agenda, as Jay alluded to. We're not selling you products, we're not selling you stocks, insurance. We're idea guys. We want to put together the architects, as Jay, I love that illustration, put together the blueprint to build your giving plan, both now and in the future. You're going to receive information from friends at the ministries that you know and trust and support. We'll work with your advisors as needed. Who are the trusted people? Whether it's your attorney, your CPA, could be a family member. Work with them, interact with them to make sure everybody's on board with the plan. We also understand your full array of options. I just made a mention a while ago. We don't sell products. We don't sell investments. We're open to the full gamut of solutions. And part of what Jay and I do when we sit down with folks is say, tell us what you want to do and why. If we can understand well and help you understand well what it is you want to accomplish and why, then we can show you the how, whether it's charitable or non-charitable strategies. We have a broad knowledge to help figure out what's the best to help you accomplish your goal. And we believe that with that wise planning, you will benefit from wise stewardship. We believe your family will benefit from wise stewardship. And frankly, the kingdom of God and the ministries you support will benefit from wise stewardship. And as the last point there says, you can help transfer dollars that probably most likely would go to taxes. You can get those dollars employed supporting the kingdom of God as you decide and as you designate. So we're grateful for your time with us. We hope we've given you some ideas and things to think about. I'm going to turn it back over to our host, Mark Mayers, to finish us up and handle some questions, Mark.
All righty. Hey, guys, thank you so much. I always learn so much when I'm sitting between you guys. Thank you, thank you, thank you. I'm sure our listening and watching audience has questions now, but I just have got to tell you a little personal story about working with Jay here, you know. We'll get to your questions. Don't worry about this. You know, I'm a rep. I call on ministry partners. These are our financial partners, and so I feel like I need to be able to speak with some sense of authority about this free, this complimentary and confidential inventory that we do. So Leslie and I, my bride and I, we have done this with Jay. We just completed it, and we just had our last appointment with the attorney. Attorney ready. I love that term. Yeah, don't you love that term? Attorney ready. I love that.
Down.
We just took it to the attorney, and the attorney said, wow, that's pretty impressive. And I said, yeah, Jay's pretty impressive. And I know Michael is too. So, also, after working, you know, for nearly 20 years, I have seen firsthand tens of millions of taxable dollars redeployed and mobilized for kingdom building simply by introducing my ministry partner friends to my colleagues over the Great Commission Foundation. I'm sure it's true at Wycliffe as well, huh, Michael? So I'm glad there's men and women like you guys who you have this God-given ability to understand some of these things that are pretty complex. I'm just really, really happy about it, and I'm sure.
Glad to serve you in that regard.
Yeah, and our audience is happy as well. So we have a lot of questions. Let's go to those. Once again, if you have not written your question in that lower right-hand corner of the screen, please do that. We have people reading those right now and typing up on the screen. So please ask any questions that you have on donor advised fund, the IRA rollover, on mineral rights, land, whatever it may be, and we will try to answer these questions. Okay, so question number one, here it is, guys. Here we go. How do I set the gift value for a gift of real estate?
Michael, you want to take that?
Sure, I'll tackle that. Real estate is one of those things that the law calls hard to value assets. Really what that means, unlike a stock or bond where you can open the pages of the Wall Street Journal and say, oh, it's worth this today. With real estate, the law requires you get an appraisal by a qualified appraiser, and that's very important. It can't be someone who does it on the side, someone who does it for a living. But essentially, you need to get a qualified appraisal to set the market value, at least for tax purposes, as to what that piece of real estate may be worth.
Gotcha. I mean, that just makes sense, right? You get an appraisal, and that's what you write down on your tax return. Hey, here's question number 2. You guys ready for this? How do I set up a donor-advised fund? Is it complex?
Well, let me take a stab at that.
Okay.
Since that was my area. You know, it's pretty simple. With the Great Commission Foundation, we have a 2- or 3-page application that you need to fill out. It explains the terms and conditions. You sign it. When you do that, you send it back to us with either a check, if it's going to be a cash contribution, or we have a stock transfer for appreciated assets. We get that, we process it, we make sure everything is correct, and then we set it up for you. And so you can have access to those funds in a week to 2 weeks. It's pretty quick. In fact, we even have some special software that once it's set up, you can go online and you can tell us where you want to have your grants directed. And you don't really have to involve us too much after you do the initial setup. So it's very seamless, user-friendly, not complex.
Awesome. Even I could do it.
I think so, Mark.
I must add to that, though, and we have very similar to what Crusade has online, but I had lunch 2 days ago with a lady who's 93 years of age, and I'm going to call you, Michael. I'm not going to get into the computer, don't want to work it, so we also handle phone calls and emails if you want to make grants.
And we do as well.
Yeah,
yes.
but most people do it online with ours as well, and it's a fabulous tool, and as Jay said, it's so simple to set up, and it's just a wonderful way to manage your giving.
Yeah. I got to tell these guys a little story. I used to call on this woman who set up a donor-advised fund through the Great Commission Foundation, and she also employed the tool described in Ron Blue's book called splitting heirs, play on word, H-E-I-R-S, splitting heirs. And one of the tools to do with your family is to take all the heirs and bring them together and tell them the plan. Well, this woman had 4 grown children. She brought all 4 grown children to a city that was not the city that any of them lived in. So she rented the hotel, got the conference room, and she laid out her plan to the 2 believing children and the 2 not yet believing children, and she just laid it out for them. It was a beautiful display of mom, who was a widow, just disclosing it all up front so that there wasn't the splitting of heirs.
I like that.
Well, a couple of years ago, one of the believing sons, texts me. I'm in a meeting, and he says, "Hey, mom went home." And I said, "Didn't know she was gone." And he said, "No, she went home." Well, I instantly started weeping. She was just a dear, 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 dear friend. And he said, "Will you come to the memorial service, and will you say a few things at the memorial?" And I said, "I'd be happy to." So I show up at the memorial service, and it was a beautiful celebration. The kids, believing and non-believing, they were just celebrating the life of their mom. And I couldn't help but think that one of the ways they were celebrating is mom just told them what the deal was up front. And she had this donor-advised fund that was set up to make gifts along the way. Well, one of the people that she had done ministry with while she was setting in a cell was this neighbor across the street, a Pakistani woman. Wow. She had a round table at her home with her pastor and the people across the street. Their imam, they came and had an open discussion. What are the distinctives of Christianity and Islam? Wow. And this family across the street just fell in love with this donor of ours. Well, at the memorial, the mom showed up, all in her burqa, and when it was open mic time, she went up to the front and she said how much she loved Miss Nina through heaving sobs of sadness, how much she loved this woman. And her last words were, "I hope she's in heaven," which is code for Mark, get back up, walk to the front, get to the mic, and preach the gospel.
Way to go.
Wow.
And so I did. I got up and I
cool.
thanked her when she was walking back to the back of the congregation, and I was able to share with her how you can know that you know that you know you're going to heaven if you place your
praise
trust in
God.
Christ. And
Praise
she
God.
just wept and wept. And the son who invited me to come and share, he's in the front row going like this, yes, yes. Because many of the people in the audience were not yet believers.
Wow.
It was a really cool
Absolutely.
moment,
Yeah.
you know,
Absolutely.
in and around the estate design thing.
Well, you know,
I
Mark,
like it.
Mark, and you raise a really great point that Jay and I have talked about and counsel people. When you're doing any kind of giving plan, but especially an estate plan, talk to your children about it. Tell them, kids, this is what I'm doing, or what, in my case, I'm married, my wife and I, here's what we're doing when we're both gone. Here's how our estate's going to go. When you tell the kids up front, while you're alive, there's no arguing, oh, mom loved you more than me or something like that. They understand what you're doing and why, while you're living. And so it really helps avoid some of the bad family dynamics of estate planning, you know, if they don't know what's going on. So
That's an excellent point, Michael, because a lot of people intuitively think, well, I'm not going to share that with them. That's private, and let them deal with that after we pass. We find when they do the opposite, and they bring their children into the process while they're alive, they can walk them through their rationale.
Exactly.
And help them get to where they would like them to be with that decision. So,
Good stuff.
Yeah.
Good stuff. Well, we say at the Jesus Film, I'm sure you guys too at Wycliffe, that we practice not transactional development or estate design. We practice transformational gift and
Great
estate
word.
design. It's transformational. People are changed.
Exactly.
Kids are changed. People are the world is changed as a direct result of what we're talking about here today. Hey, let's go to our next question. Question number 3. Why should I give from my IRA when I can just give cash?
Michael, I'll let you take
Michael,
a stab on that one.
I think I made a comment in the end of Jay's commentary on IRAs that it's the best way, if the law passes, it's the best way to make a gift of cash because, again, it's not in your taxable income and you don't have to report it, and it keeps your adjusted income low, even if you don't itemize. Because if you have to take a distribution out and you don't even itemize, that pumps up your taxable income. So I'm of the opinion that it's probably one of the best ways to give cash gifts, at least if you're 70 and a half or older, and assuming, and we hope and pray that this law does get passed between now and soon.
Yeah, so what's the holdup? I don't really understand what the holdup is. Why does it always come down to December and people have to wait and wait and wait? Is there enough time? I mean, why is it
Well, I
always
think it's largely because it is a budget issue, and it gets down to, can we really afford to do this or not?
I see.
And so that creates the debate.
Okay, all right, all right. Well, stay tuned, everybody. This could happen. It may not. Looks like it might, but stay tuned. Hey, here's our next question, guys. Is there a time limit for distribution of the dollars from property put into a donor-advised fund?
Well, let me respond to what we have at the Great Commission Foundation. We like to see people make a distribution annually so that at least we know that they're using the fund for its intended purpose. I believe we might require a 10 or 15% amount each year, but if you want to do more, that's great. So we do like to see that it's active. And the other requirement that we have is that we only require that of whatever you give out, the 10% goes to a crew ministry, and the other 90% can go to a ministry of your choice. So you really have a lot of discretion and time with which to make those grants.
I would just add to it, one of the great things of a donor advised fund, which you, Jay, touched upon, you can make the donation this tax year, get the tax benefits, but you have time. There's really no legal requirement you have to give away so much so soon. I've read statistics, but on average, I think donor advised funds give away at least 20%. The other comment I'd make on that is, like you, we ask that people make grants of at least 10% to a Wycliffe family of ministries. And the last comment, which is escaping me, we encourage people to give out of their donor advised funds. I had lunch with a lady yesterday who has a significant donor advised fund with Wycliffe. I say, you've got X amount of dollars. We've talked about you doing this for your church and this for Wycliffe. Where are you in that process? And she's like, I need to do it before year end. Make some significant grants to both her local church, to Wycliffe, and to Wycliffe Seed Company. So as you all say, we don't want to encourage barn building. We want to encourage people to get the money used for the ministry. And I think, at least in my experience, many people are of that same nature. They want to get it out. But back to the original question, there's no minimum or maximum time limit for a person to make grants out of their fund.
Gotcha. And let me just add to this, Michael. Here we are in September. We're less than 4 months from the end of the year. So if you are in need of an additional tax deduction, you can set up a DAF between now and the end of the year. You get the tax deduction in 2015, and then you get to take your time as to where that money goes. So this is, the timing could not be better with which to be thinking about that as a strategy.
A DAF, a donor advised fund, ladies and gentlemen. Well, do we have any more questions? Let's look up at the screen here. Do we have any more questions? It does not look like we have any more questions. Well, so, guys, thank you so much. This has been a joy to be with you guys. I learn stuff every time we're together. And it's my understanding that our guests can contact either one of you at any time, ask questions. They'll have your email and the telephone on one of these screens that come up here next. Michael and Jay are ready to answer anything you have. If they don't know the answer, they'll go figure it out and they'll call you back so that you can know your bases are covered, like the title of the webinar suggests. Remember, a video recording of this presentation will be available for viewing, again, at this same web address beginning on October 5th. That's just a few days away. Please feel free to share this video with friends and family. And just in case you want to see our mugs live and in person again on Saturday, we're going to broadcast once again Saturday morning, 10 o'clock Pacific time. You know what? If this webinar has been of benefit to you, will you please let us know? Shoot us an email, give me a call, give one of these guys a call, someone you know on staff with either Wycliffe or Great Commission Foundation, Jesus Film, Campus Crusade. Let us know. It kind of drives the content that we're going to bring to the next webinar, doesn't it?
It does.
It does, absolutely.
So, ladies and gentlemen, thanks again for joining us today. God bless you in your evening tonight.